distinguished guests, ladies and gentlemen, good afternoon. Thank you so much for joining us this afternoon for our session. We're going to be looking at the role of state, and mainly we will try to just create a clear understanding of what roles actually exist. And we'll also try to pick a few lessons from the countries represented. So we have Egypt, we have South Africa, and we have Zambia. Dr. Maria, who is on the virtual platform, will just start us off by just laying the context on the various roles of state and just try to explain to us what are the possible interventions, and then we'll go to the specific roles that are being played by the governments represented. Dr. Maria, kindly.
Thank you very much, Beatrice. And hello to my distinguished panel members. I am on camera, but it tells me that my video has been stopped by the host. So maybe the host can show my face. Otherwise, I will just begin to discuss the topic. This is the role of the state is, of course, an enormous topic, a very broad question, and there are definitely no simple answers here, because housing markets are extremely complex. They are the most complex markets that we have. And that is because it deals with input markets, markets for land, markets for finance, markets for infrastructure. All these markets have to work well for the housing market to function. So it is an enormous complex. When we talk about the housing markets, it's extremely complex. On the production side, we have many different actors. We have financiers, we have developers, we have builders, we have landlords, all have to play their role next to the state. And the state has to make sure that all these actors can actually have incentives or have the right incentives to come into the market. And we have talked a lot about PPPs and so on, but the PPPs are not so simple, and a full PPP may not be the answer. It may be too complicated to get, for instance, the private sector involved in the lower end of the market. So we may have what I call a soft PPP. So for the state is to figure out what type of private sector participation do we need? Do we need full private sector participation in management and building and so on? Or is there another form? What's the role of NGOs? So that whole production part and management part is, of course, very complicated. And then the last part is the demand side. We have many, many different population groups that require housing. The top end of the market takes mostly care of itself, but we have at the below median income level, and we have informally employed, we have low income, we have female-headed households, all with their own requirements and problems. So the role of the state is to look at all of that, the functioning of the entire system, and to see where it should play a role to make that system work for everyone, and particularly for the lower income end of the market, of course. At the moment, most of the countries in sub-Saharan Africa and elsewhere, I may add, are incredibly fiscally constrained. So it's very complicated to see how you can reach the bottom end of the market without subsidies. But you have to keep the subsidies, and that is the role of the state, to make sure that subsidies are allocated well. How can you reduce the cost of these subsidies by focusing on good regulations, on building good institutions, so that that part of the market can function well with minimal subsidies, because the state only has so many tools: regulation, institutions, taxation, and subsidies. So by using the regulation and planning tools, what can the state do? We were just told about in the previous panel about, is 300 square meter plot size the feasible? And of course it isn't. So we have to figure out what regulations can do to make markets more efficient and affordable, so that the role of the state can be to focus on the lowest income level of the market with subsidies. So I know we have wonderful examples and case studies in the room from three very exciting countries. And of course, as everyone knows, I have worked now in Egypt with May for a very long time, and I'm excited to see that case study presented here. So that is my introduction. The framing and the role of the state is critical. What we miss very often is a good diagnosis of the exact problems in each of these markets that need to be solved for the housing market to actually work well. And because of the lack of diagnosis and information, we often what I call shoot from the hip. We say, oh, okay, this has worked in this country, let's create a refinancing window, or in the finance sector, or let's do like what Indonesia did. And that often does not bring maximum outcomes in each of your markets. So we really need to look at the problems in each country and identify what role and where, in which segment of the market, the state has to come in to facilitate production, particularly of affordable housing, of course, and to make it sustainable, because the climate dimension is extremely important. And without the role of the state, that dimension is not automatically taken care of. So I want to leave it at that to frame the topic and listen to all the case studies of the different countries that are here. Thank you.
Very well stated. Thank you so much, Dr. Maria. We would love to see you. So if you could just try to switch on your camera one more time. We think the problem has been solved now. Before we proceed, kindly.
No, yeah. I can see myself now. Can you?
Making progress, but we'll see if the technical team can just try to improve that so we're able to see you. But in the meantime, we'll just look at the case studies that we have. And from your statement, then it's clear there are so many roles a state can choose, or recommendations that they could actually take forward, depending on the dynamics of the specific country that we're dealing with. And I would like us to start with South Africa, Madam Mulalo. What role has the state chosen to work with over the years? And has it been consistent all along, or has that changed over the years? Please talk to us about that.
With regards to South Africa, what we have is that with the housing function, it is a concurrent function. You have the national department that would set the mandate, and then the provincial departments are part and parcel of carrying out the mandate. But the delivery with regards to housing happens at the local level. So it means when you look at the state, it talks about that concurrency of the function from the national perspective, provincial perspective, up to the local level where this delivery actually happens. And in this instance, there's also the issue of with the facilitation, there's also the financial support that gets provided from national department down to the local level where implementation takes place. And what is of importance is the partnership part. The partnership with regards to the levels of government in terms of delivering on the mandate, because whatever it is that gets done from that mandate that gets provided, there needs to be a plan for the funding that gets allocated, and as it cascades down, then comes the issue of regulating, issues of monitoring and evaluation on the on what the money is being. Those are the things that you find that at national level that get driven from that level, and the mandates cascade down. So with regards to what has been achieved to date, what the programs do that we have is that they look at the need, the demand is driven. Of course, the legislation and the mandate part are from it's top down. With regards to issues of the need and addressing the need, that is bottom up. Where at what level, at municipal level, there'll be determination of what are the requirements, what is it, what are the needs, what are the people that are in need, how many number of indigents do we have that needs to be serviced, and looking at what would be available within a period with regards to funding, then that gets fairly and equally appropriated down to the local level so that they could. And of course, there's quite a number of positives that we have seen over the years, because we provide your rental market, free giveaways, as well as what has the previous presenter also touched on it, talking about the public housing across various programs. So we are proud to say we have already covered, in terms of housing delivery, 3.4 million households have received housing. And what we have indicated now with just the latest results of census that came out, 17 million households, 88% of those are already in formal housing, and only 8% are in informal housing. So that's quite an achievement with regards to the program that we are running in South Africa. I think I'll stop then for now. Thank you.
Thank you. That's very helpful. Over to you, Mrs. May. Egypt has a very strong role of state. And last year, when you had the AUHF conference in Cairo, we were able to see the projects that you are working on. And we would want to understand, you who has been at the forefront of driving the housing initiative, talk to us about the progress you've made so far and what the impact has been.
Thank you, Beatrice, for the introduction, and I'm happy to be here again this year. It was a pleasure to have you all last year. I'm honored to be on the panel with Dr. Maria, even virtually. We used to work together since 2006 to build this whole infrastructure for a housing program, a sustainable program for the poor. So we started with working on creating a mortgage market in 2006, 7, and 8. We've had projects with the World Bank to have the secondary market for mortgages. We've had initially a mortgage law that was issued in 2001, but bookings were very limited given the limited supply of formal housing that we can finance. So we have worked a lot on building the infrastructure of the mortgage markets. Then by 2010, we've had like a couple of projects with the World Bank, but we realized that we have a real issue with having formal housing supply being built and ready to be delivered. So the mortgage market is there, but the beneficiaries can't access it because the affordability is difficult. We have an income level that is around $140 per month, while nowadays the cost of a formal low-income housing at cost is around 16,000 US dollars. So if you want to go down market, then you need some form of interventions. A quick overview of the challenges we had that made us believe that state intervention is a necessity and it's not a luxury. We are a country that has 105 million of population. We have 1 million marriages every year. We have a population growth of 2% or between 2 and 2.5%. So we add on like 2.5 million additional population every year. So you can imagine the number of houses you need to create with the infrastructure and so on. The urbanization rate is 43%, which is not bad, but beyond our targets. Egypt is a desert country. It's a 1 million kilometer in space, but we used to live on 7% only of Egypt along the Nile. So we needed to create communities, expand in the desert. So create new cities with service lands. You visited some of those. The cost of the infrastructure definitely is huge to create cities and the services needed and so on. So this also had to be done by the government in order to attract private investments to those cities. You need to spend a lot on the infrastructure. And by doing that, we managed to sell lands to private sector for middle and upper middle income. And we had some cross subsidization from that enabled us to build the first batches of social housing in 2014 when we started our program. We started the program by establishing a constitutional right that establishes the right to housing for Egyptians. So and then we created the social housing fund, which is the institutions responsible for doing the mandate of facilitating the right to housing. And as Maria taught me, we need to depend on the housing finance sector, because to run a sustainable program, it is going to be very difficult to do regular public housing. In the past, maybe 40 years before we launched our program, Housing for All Egyptians, we had public housing that was diminishing in sizes year after year, done on installments to individuals that were not paying because this is state money. So you had like a collection rate of 10% of installments. So governments were doing statements that they want to build 500,000 or 1 million, and then the numbers kept on diminishing years after years because of the reliance on state finance. So we had to build this relationship with the financial sector so that to launch a program that is going to be sustainable. And definitely with the numbers you have seen, we understood that we need some sort of state intervention in forms of subsidies. You want to keep the subsidies as low as possible, but at the same time you want to reach your desired population and improve their affordability levels. So we started the program by a cash subsidy and mortgage that was at 12% in the beginning. We had the very limited appetite because the 12% was high at the moment. Nowadays, we have an interest rate of 24%, almost, given after this wave of inflation we've seen in the past couple of years. So more challenges. So we had to create something that the state will intervene in, and with time we exit a bit the market, the interest rate subsidy mechanism, and rely more on the cash subsidy that is deducted from the down payment in the beginning. To encourage the banking sector to come in the beginning, we had to come up with a program that gives them confidence that they will be able to collect their money. So we made sure to create a fast track system for registration of mortgages so that they can foreclose if the beneficiaries don't pay on time. We allowed them some good margin of 4.5% in the beginning. Now we reduced this margin to 2% when we managed to book the big numbers, and the performance of the portfolio has proved to be very good. We had to provide credit insurance in the beginning. We managed with the insurance companies to bring in some credit insurance, but banks with up to the first or second year of the operation of the program, their decision was to not to rely on the mortgage insurance because the default rates were very low. We created a subsidy system that is it works with the income levels that we are targeting. So the higher the income, the lower the subsidy, the cash subsidy you get. And we had a 7% interest rate program, and the differential between the market rate and the interest rate offered to the client was to be paid by the state. Definitely last year we had some fiscal challenges because of the increase in the interest rate regime from 12 to 24. We've had several races to target inflation. So as I explained, the interest rate is 24%. But this program has made us able to deliver more than 550,000 beneficiaries in those past 8 years. The appetite for doing more is growing. We have established a very good credibility with the beneficiaries. In the beginning, we've had very limited appetite, but with time and the system, the workflow system that we have established, and the IT system that we established that enabled us to process a big number of applications, and the systems we have built with banks and the credibility we have created with them through the years has enabled us to book a big number. And definitely the reliance on housing finance is what made us able up till now to manage and do more houses, because we collect the mortgages and reuse this for construction finance. We have now 30 banks. Many of them are private banks. We work as a master developer, so we tender the process of building the houses, and we sell at cost. We pick the best contractors. Most of our contractors, we have around 2,000 contractors that has grown with us also through the years. So those 2,000 contractors has been building all over Egypt, creating a lot of jobs. So we've created around 4 million jobs, direct and indirect. So this is the kind of relation we have with the private sector in the program. Maybe we did not manage yet as one of our challenges to bring in developers to take the whole process, and we work only as a facilitator and a subsidy. We have been trying to do this through the past years, but given the limited margins and the uncertainty, given the inflationary environment we have witnessing, we haven't managed yet to bring in the developers in full. But at least we had the contractors that are all private sector, and also the private banks and the mortgage companies. So far, the numbers and the performance are amazing and putting more pressure on us to do more, especially with the population growth. But the interventions are becoming more costly with inflation. That's why we are trying to come up with some revenues, and we are doing some amendments to the law to allow us some extra revenues that we can use to subsidize. But subsidizing is definitely a necessity. I've heard some comments yesterday, why subsidize housing? This is done everywhere, and this is what bridges the affordability gaps. So definitely needed. This is a very important program for Egypt, and we plan to continue on doing that.
Thank you so much, Mrs. May. That is very detailed. Thank you so much. It's evident that in the two states, the government or the state has assumed a couple of roles, and it's not just concentrating on one role. I would like to understand from you, Professor Malama, what is the Zambia government doing in terms of supporting the housing sector?
Thank you. Technology has a way of frustrating you at the wrong time. I would like to say this is the first time since I became permanent secretary that I'm being asked to talk in public without formal salutations. It's quite refreshing. Ordinarily, I expect to recognize people who are here, but today I've been given a chance to be free and not to go through that. So I'll answer the question in a different way. I want to say that we are quite grateful that we are here. My team and I, we are at a stage in Zambia where we are having to relook at the way housing is provided. We are going through a serious reorganization. We know what doesn't work, and a lot of the things that don't work, I think, we've heard here. But we've also heard a lot of things, possibilities that we can actually go towards, and also possibly use as a way or as solutions to some of the problems we have. The usual, I mean, we know, for example, that mortgages are high. Some of the mortgages are as high as 27%. So the question is, how do we then look at this financing sector for housing and see how we can find solutions that would deliver mortgages that are 10% or lower? We know that there is an issue of availability of land. The systems that we have created to deliver land for housing are not working. We have a Ministry of Land that helps with the delivery of land, and also the Ministry of Local Government that helps with the subdivision and facilitation for development of the housing. There are bottlenecks there that we are having to look at to see what is possible. One of the things that have happened in the recent past, for example, the Ministry of Lands has digitized its entire process of land delivery. That happened like a couple of months ago, 3 months ago. So we are hoping that that is a possible solution to enabling land to be delivered for housing development. We know that the cost of building materials is very high. That is one of the major issues that we are having to grapple with. And as a result, it's expensive to construct. So we are having to revisit this, look at how much of the materials that go into housing development are actually imported. If we looked at providing local materials, what would be the cost reduction by replacing some of the imported materials? Because importing has a problem. If you have an exchange rate that is not stable, the higher the exchange rate, the higher the cost of importing. So we are having to relook at how do we replace some of the imported, and it's quite a big chunk of materials that we use. Some of the imported materials with local materials that then can help us reduce the cost of construction. So I have to say that it's quite refreshing for us to be here. Some of the issues that we've been grappling with, I think there are answers that we're already beginning to see. So when we go back, we are going to sit down and look at a lot of these things and learn from our colleagues in terms of what has worked in different places. Only this lunchtime, we had a very detailed meeting with our colleagues from Kenya, where we are looking at how to set up a mortgage refinancing facility because it seems to have worked in Kenya and other places. I think Tanzania is another one. I'm told it's there in Egypt as well. Nigeria is another one. So these are some of the possibilities. So we are having to look at different options and using this platform that we've been given here, or opportunity rather, not platform, to identify some of our colleagues that we can talk to in terms of finding solutions to some of our problems. The role that government plays in housing development is a traditional one. We provide a conducive and an enabling policy environment so that housing development can take place. We look at the legal and regulatory framework. We just a couple of years ago changed our national housing policy or revised our national housing policy. A couple of months ago, we launched our national infrastructure policy, and then we are currently in the process of revising our PPP Act, which we hope that will be the new act to be in place maybe even next month. But we're also looking at the National Housing Authority Act. The National Housing Authority is a organization that Zambia has created for housing development. This is a government created institution that delivers housing. Now we have had a problem with that because it hasn't been functioning well. So it's also undergoing some change. We're having to review the roles that it has been playing. From 1971, when it was created, it has been acting as a developer, but it has also been a regulator. So we are trying to see how we can look at that. So we are going through a review of the NHA Act, or the National Housing Authority Act, in order to make it more robust. Government also has been involved in the recent past. When I say recent past, I'm talking about last year before, by directly building housing, social housing for those who are the vulnerable. So we work with our Ministry of Communities Services, where they identify those who are unable to house themselves, and then we provide housing for that. So apart from the role of creating the enabling environment, we also do actually get into the actual construction of houses. Now, I saw from Namibia that they have a shortage of housing of 300,000. I think where we are and where they are, we are very far. Ours is 1.5 million. So that gives you the nature of the challenge that we have to deal with. We have to be very nimble on our feet to solve some of these issues, but we also have to be very creative. We have to, business as usual is not going to work. We have to be very open-minded about some of the solutions that we have to look at in order to find solutions to some of the problems we've been facing, and certainly coming here, giving us that opportunity and glimpse into what some of those possibilities are. Thank you. I'll stop there for now.
Thank you so much. I pick from your conversation that you're trying to change from how you've been doing it in the past to be able to meet the housing deficit or to drive housing delivery even better now. And South Africa, if we were to look back from 1994, there seems to have been change from how you did it before, trying to do the housing delivery as government yourself, to a point where you're currently now trying to get the private sector to also participate actively. I would like to understand from you, what has been the impact of that process? And do you think over the years, with you changing your approach, have you been able to achieve a more inclusive market? And Is there significant private sector involvement at the moment, or that is still work in progress? Thank you.
Okay, thank you very much. Over the years, there's been a lot of improvements. One thing that we have brought into the picture is how we plan. We plan over a 5-year period, and we have it as medium-term strategic framework. So that plan that we put in place on a 5-year basis, it means it gives us an opportunity of going back and reviewing and seeing if in the previous 5 years we did make any difference where we need to improve, and that gives us good perspective. It's medium term, not long term, but of course it builds into the long term over the years. So with regards to the products in housing that we provide, we've seen over the years that free giveaways are not sustainable, but we had to start there because of the challenges and the historical background that we have as a country. We had to start there, but it's not sustainable. So over the years, we are moving gradually, revising our policies, our programs to start moving into co-production. Co-production, not just with the private sector, as well as with the communities themselves. Because yes, you would want us to engage more around the private sector coming in. For us, it's not just about the private sector coming in, it's also about the communities coming into the picture. So with regards to the private sector, as you know, all the departments that we have across government, we've got entities as well that assist with regards to delivery of the services. So even in housing, we have entities that assist with regards to delivery, making sure that whatever it is that we are delivering is regulated. And that then moves into the angle of the private sector as well. The banks, we are part of and parcel of delivering on our affordable housing. What we have is that we have programs that of course are subsidized dependent on the income that a household gets, and then the banks come into the picture with regards to topping up on the subsidy that government would have provided. So we've got private sector in our in this space where we're providing housing. And one thing that we put forth is the incentives. Incentives with regards to if it's with communities, having to put up the savings themselves, that works to their advantage with regards to the reduction of the mortgage that they would be getting into. With regards to private sector coming into play, it's also issues of what are the subsidies that government are putting on the table that would incentivize, and also talk to issues of risk, co-sharing of risk with the banks, so that they can come into the picture and play within the space of the development of housing for those that cannot afford, and also those that afford those that are in the middle income, low to middle income. So we are within that space. And of course, some of the challenges that we are trying to deal with is you find that at community level, when we talk of co-production, we're talking about people that would be highly indebted. So meaning for them to be able to get out their indebtedness, it means you will have to bring in your entities to work together with the communities so that they are able to provide training capacity with regards to saving schemes that would assist them to be able to access housing finance. There's also the issue of developers that would at times difficulty with regards to accessing finance so that they are able to participate within the housing development. So they are part and parcel of the private sector as well. They come from development perspective. They need to have access to finance so that they can be able to speed up delivery. And at the same time, you find that government will have to keep on coming in with that first part where I talked about the mandate and the regulation part, so that these developers do not get out of the game because of lack of funding from their side or access to funding. So it's not quite a smooth road, It's quite bumpy, especially looking at the current way, the rate that the economy is going. I think this affects everybody in Africa. It's not just South Africa. So you find that the fiscus is dwindling, but the demand is still out there, and government needs to play the facilitating role so that everybody can come into the picture, and then they could be delivered on the ground. And to top it up, because of climate change as well, there are issues of disasters that we are having to deal with on a continuous basis now. And every time you realize that instead of addressing the housing demand that is out there, they first address the destitute households that would have been unsettled by the disasters. So it's quite a lot of work that government has to put in. But one good thing that is an advantage to us now is that we are getting into the end of our 5 years, and meaning what we are putting in place, we are reviewing our Housing Act. We have a white paper in place now, and that comes with review of there's legislative reforms, economic reforms that are coming up. So basically, that's what's coming in, and from all the reviews that we've done over the years, we see improvement going forward. Thank you very much.
Thank you so much. South Africa is just one of the countries whose role has changed over the years. And you're talking about the 5-year strategy already coming to an end, and you need to revise it once again. I would like to get from you, Dr. Maria, what is your view on government's shifting roles? I think it's evident that it's necessary, but how do they need to prepare? Because this change comes with a review of policies. There's structural changes that need to be there for you to be able to assume new roles or additional roles. What's your view on that, and how do governments need to prepare themselves for that?
Thank you, Beatrice. Yeah, the first thing I would say here is the lack of coordination has to be addressed between different levels of government and different departments of the government, from the central bank to the Ministry of Housing, Ministry of Finance. Everyone has, and Ministry of Lands, if that exists separately, have to be coordinated. Because of lack of funds at the moment, that's critical, so that everyone can play a role. And that the role the role of the state is particularly to look at both the finance sector and the supply side. And the finance sector, you have to really, with all the players together, look at precisely what are the risks that the banks and mortgage companies cannot handle, and what makes capital very expensive. If it is a macroeconomic problem, and that is what it is at the moment in many countries, then the cost of funds may have to be addressed in order to reach the lower income segments. So we need to look at mechanisms of blended finance that can then be phased out when the interest rates go back to a more normal level. And that will, of course, happen. But in the meantime, you may need to look at blended finance to bring the cost of funding for the banking system down. You also want to do very precise analysis of the risk that the banking sector cannot take. Everyone thinks it is the credit risk and that we need guarantees. We found out, as May mentioned, in Egypt, that that was not the problem. The repayment of the loans, even by informally employed, was very good. And the housing guarantees would only drive up the price for the consumer, because, of course, ultimately it is the consumer that pays for the guarantee. So it was not the most necessary thing in Egypt. It differs per country. But what other risks are there that the financial sector cannot take? Interest rate risk is another big one. Liquidity risk is another one. So what can be put in place, as the Honorable Minister, Permanent Secretary mentioned, on Zambia? Do we need a liquidity facility to facilitate the part of the risk for the private lenders? The same is true to look very carefully, issue by issue, on the supply side. Are the planning tools available at the local government level to facilitate developers to come into the market? Is the permitting system efficient? Are the standards too high for what in general the population can afford? And are you actually subsidizing housing that is of a very high standard and that makes your resources of subsidization really spread too thin? So look at the local government level and see what local governments and the standards that they apply and the permitting procedures that they apply can be improved to get the private sector involved because of the constraints on the public sector to provide housing, of course. But it all has to be coming together as one package. And countries that have looked at the system as a whole have been able to actually make the role of the state much more efficient than in the past. I think of a country like Thailand that has been very successful in getting low-income households served by market forces. So what can be done? What is the mix? And it differs per country. And look at all the costs and the risks that makes it difficult for private developers to come into the market or for private contractors to come into the market and for individual households to come into the market. I'm thinking here of the backyard dwellings in South Africa. Many people were given a very large plot in the beginning of the housing program in South Africa. And they are now filling up these plots with new rental housing, which, when this can go to scale, will deliver really a lot of private sector rental, which is very difficult to do at scale, but on a small scale and controlled by the landlord on their own plot can be very, very efficient. But what are the tools for the local governments to facilitate that this is done in a way that it complies to the standards of the municipality? What supportive role can a municipality play? And particularly important, and that is not solved yet, how can the banks finance this type of developments? So each country has a different set of options. But when we look one by one for each segment, what the costs and risks are that the state can play a role in to alleviate, you can find pockets and important institutions and regulations and subsidies to unclog the system. I leave it at that, yeah, for now.
Thank you so much. Thank you so much, Dr. Maria. Our time is up, unfortunately. Yes, if you just allow me 30 seconds per person to just make a closing remark. And what is your key takeaway from whatever you're already doing or what you're planning to do as a government? Just one lesson that we can take from here. Thank you. We'll start from that end, Professor Malama.
Yes, my key takeaway from this is that a lot of the problems that we are facing in Africa are the same. But I'm also very optimistic that coming together like this particular platform gives us an opportunity to learn from each other and carry through some of the lessons that we can pick up from here in order to resolve some of the vexing problems that each of our countries has been grappling with. Thank you.
Thank you. I think from yesterday's roundtable to today, issues of addressing affordability and how we as government can be able to facilitate the triple P's partnerships with the funders, with the banking facilities that are available. So we learned a lot from the experiences that were shared here, and that's our takeaway. Thank you.
I think what we've learned through the past and from your interventions, you need to be dynamic. Your programs have to change in parameters. You need to revisit each and every year to address the different challenges. So, for example, in our starts, we had difficulties to reach women, informal people who with informal income. So we had to address that with the banking sector, the financial literacy issues. So you needed to create awareness for the public. 65% of our population was perceived to be not bankable. They never dealt with banks. So this is an awareness you need to create and build on, and so on. So I think you need strong bodies also to manage the cooperation with the different stakeholders. So, for instance, at our start, we had to organize with the central bank meetings bi-weekly with the banks and work with each and every bank to address their concerns and the risks they perceive, to encourage them to come in. And this is how you manage to reach the volume and go down market and reach your targeted population. You definitely need to rely on the beneficiaries' ability to take debt. You maximize their leverage capacities, so that you don't pay a lot of subsidies. So we allow them. For instance, we started with 25% debt burden ratios, and we moved to a 40% regime, given that many people have extra informal income that is not shown on their income slips. So and so on. So you have to continue and be dynamic and revisit and review each and every year. And above all, coordination with all stakeholders.
Thank you all so much for creating time. Thank you so much, Maria, for joining us this early morning on your end. I really appreciate it. Let's take our seats kindly, and kindly a round of applause as my panelists take their seats. Thank you.
That's a conversation that we'll have to carry on as well. Lots to think about the role of the state. We are quite pressed for time. Olu, we'd love for you to come and join us up on the stage. And this is nice. This is a conversation between Olu Olanrewaju, who is the director at Altair. Altair is a member of the AUHF and one of the sponsors of this conference. And Mukhtar Abdul Mutalab, the CEO of Family Homes Funds Limited in Nigeria, also an AUHF member and also a sponsor of this conference. And this is, I think, a really nice topic of a good partnership. And we've been watching the evolution of Family Homes Funds and how it's working in these different spaces. So let me hand over to you, Olu. Thank you so much.
Hi, good afternoon. Yeah. My name is Ololaraju. I'm a director at Altair. Altair is a UK-based advisory firm that have been working in the affordable housing space now for too long. And interestingly, a lot of what we now do in terms of our global practice, we started doing in the UK housing sector. So the role of the state, and in terms of how the state helped create an enabling environment for the private sector, initiatives that we've been heavily involved with in creating in the United Kingdom, and now we're slowly doing the same as part of our global work all over Africa and Asia. But I have the joy this afternoon to speak with the MD of Family Homes Fund. It's a discussion, but typically as a consultant, I will do most of the talking, and then he will pay me thereafter. So that's the plan anyway. But what we want to talk about is actually an initiative that Kese mentioned that I would call the largest state-funded startup, which is the Family Homes Fund. You may be aware of the organization. You must have picked up stuff about its reputation, which precedes it. But actually, it's a startup in the sense that it's only been in operation now for about 5 years. So when we talk about a lot of other institutions here that have been around for a long time, Family Homes Funds, within a short period of time, has played a critical role within the Nigerian housing sector. And apart from the MD, we also have among sitting somewhere is Jumoke Akinwumi, who was also a founding director of Family Homes Funds, which is she actually commissioned Altair to with the then Minister of Finance to help set the institution up. And what we try to do, and the MD will come in terms of where we are currently, was to understand firstly what was the challenges within the housing ecosystem within Nigeria, and what were the lessons to learn in terms of some of the institutions that had been created in the past, and also what are the international best practices that we could bring into play. And for me personally, working in the housing sector in the UK for many, many years before working in Africa, it was a joy to be part of trying to set up something new. So it was a sort of frontier work. And some of the considerations we took into, issues we took into considerations was a fundamental issue about demand and supply. A lot of the institutions that had been created before then either were set up to deliver supply, or in some cases, to address demand issue. The holistic, and when you talk to the market, there was the gap in the marketplace in terms of the role of the state was an enabling institution that would tackle the housing value chain issues. But principally, for developers in Nigeria, was to address the issues about high cost of development of project finance, the inability to have access to serviced land or infrastructure, the whole issue about tightening issues, the absence of offtake. And so when we set about trying to set up family homes funds, we were looking for a model, a business model that enabled it as a fund to act as a catalyst to address those issues. And we will talk about some of the progress that is being made in doing that. The other thing we were trying to deal with was also understand the political challenges of setting up effectively an institution that relied on government resources. So Family Homes Fund, its primary shareholders was the Sovereign Investment Fund of Nigeria and the Ministry of Finance of Nigeria. And the plan then was typically for a lot of might say, and apologies to ministers and very highly capable people in the room, always start with big announcements. Nigeria has probably never produced 20,000 new homes for affordable housing, but the expectation was that Family Homes Fund will produce 500,000 homes in 5 years. And the commitment at that time was also that it will be given, I think, equivalent then of about $500 million over 5 years in terms of government allocation. But we as designers always knew from experience from elsewhere that was always fraught with political challenges because it was very difficult to create an institution that will consistently receive allocated sums that is being awarded by government. It just, at least in my experience of working across Africa on a consistent basis. So we designed a model whereby we were always going to get private sector involved as early as possible. That's why Family Homes Fund was set up as a private limited private company, although owned by the main initial shareholders were the government institutions, but with a plan to bring in the private sector as equity owners down the line. And also, the idea was also that you leverage the the cheap government funding with private capital. So one of the offtake we created was a product which I'm really pleased they're now launching, which has been funded by the African Development Bank, called Help to Own, which was going to provide that offtake guarantee to developers. So they're going to give developers construction finance, and then the developers will have access to this offtake loan, which means that it de-risks their project. The other thing we thought about in terms of designing this state institution was recognizing that it can also play a role, not only in terms of home ownership, was also the issue about rental housing. Again, the feature of a number of discussions, at least I've experienced coming to this event in the past, it's always been the role of ownership, as far as I'm concerned, it's always been overplayed. The reality is that the most functioning housing market, if one exists, always has a balance. There's a balance between ownership, there's balance between rental housing. And the reality for all of us, which we also know, no matter how badly managed or the quality of the housing, the reality is that a significant proportion of people in urban population in most of our cities are living in rental housing. So one of the things we set up in terms of family home funds was that it was going to have streams of funds: the home ownership, the construction finance, and the rental housing fund, and also a fund for strategic land assembly, because we recognized also that there's no way we can talk about supply till the cows come home, but if you don't have the serviced lands that is actually accessible for developers, help them to prepare for funding, it will not be impossible. It will be impossible to achieve that. So it was always recognized that it was bringing to the table its connection with government, its cheap resources, and its technical know-how to help as a catalyst for changing the market in terms of affordable housing supply. Within a short period of time, it has made significant progress, but after the MD waxes lyrical about the progress, I will sort of round up and say what I see as the sort of threats and concerns that as somebody that played a role in its design sees as dangers for the institution going forward. But it obviously would be said, those words were coming from me would be more as a critical friend in to ensure that, as we say in England, mind the gap. So I'll hand over to the MD to say a few words about progress to date.
Good afternoon, ladies and gentlemen. Thank you. It's a privilege and honor to be here. Thank you very much for your very comprehensive review of Family Homes Funds Limited, a company set up in 2017 that has only commenced operation in Nigeria in 2018, with the federal government owning most 100% of the stake through to its separate entities. Given that you have basically rendered it all, I think what I just need to provide is an update on what we have been doing and efforts that we have taken to ensure the sustainability of the institution to be able to deliver on its laudable objectives. So I'm glad to say that all indices are trending positively. Our ratings have been upgraded steadily. Everything, our balance sheet has grown consistently. Our revenues are trending positively as well, thanks to the very robust corporate governance structures that were set up from initiation, from setup. So the company, we are poised to grow higher and better, given the large array of viable projects and pipelines that we have lined up. There's a lot of interest from various sectors within and outside the country. We're very glad to say that we're poised to deliver that even better. But given the typical constraints that are replete in our societies, raising capital from the federal government is always difficult. So what we're doing is to go back to the origins, leverage on our public sector foundations to raise capital from external sources, such that we're able to continue to blend the finances and all what have you to be able to deliver affordable housing. So far, in 5 years in active operations, we have been able to finance about 17,000 houses to full completion. All things being equal, before the end of the year, we have another 2,000 that we hope to close on financing. So we're trending positively, but there are several push and pull factors that are at play that obviously have to make us blend our portfolio, modify our operations, and also see how we can vary our operations to optimize the relative resources that come to us. So we will continue to work with institutions such as the Africa Development Bank to strengthen the demand side, and NMRC and other institutions that are here. We're exploring partnerships with several institutions within and outside the country to see how we can build better, improve on how we do build quality, decent, affordable houses within the shortest period of time, and continue what we're doing in the supply side. So there are several opportunities still, given the vast array in Nigeria and the limitless opportunities that are out there. We are open for business, so to say. We welcome financial institutions that are ready to partner with us and support our activities. We are hopeful that some DFIs will come on board to support us to partner strategically in specific transactions and developments. We are open to receiving, also engaging with housing technology companies to see how we can enhance our capacities and do what we can do and build better and faster and all what have you. And lastly, of course, like Olu mentioned, the setup was by the federal government, but it's a setting that is not cast in stone. So there are opportunities for even equity investors to come in to see how we can broaden and open the horizon and see how we can play. So in summary, it's for me to say that Family Homes Funds has posted impressive results so far. It's there for everyone to see, I suppose. So there's an opportunity full for more growth and development. We're fully corporatizing. Our structures are such that enable that. A limited liability company, even though owned by the government, but we have the best of corporate governance structures at play. So we are open for interested parties to come and engage with us. Thank you so much.
Thank you, Andy. So I think just a few words on what I see as potentially opportunities, but also threats for institutions like family and from or state supported institutions such as FHF. And this comes from obviously a long track record of setting up such institutions elsewhere, and in some so-called matured organization countries as well. And I think at times it's the progress, even though within the context of the demand and the needs within Africa, at times we don't identify that progress we're making because the demand is so enormous. And I obviously have this sort of unique position of being able to still operate within Europe and UK and also operate in other parts of the world. It helps me to put some of this into context. And one of the contextual issues is that this is effectively a startup. Considering the ecosystem of trying to deliver housing in Nigeria, the fact that Family Homes Funds have achieved nearly 20,000 homes, when I compare it, without mentioning names, institutions that have been around for over 30 years within the same environment have probably not contributed less than 10,000 homes. That progress should not be underestimated, and it's important to understand the ingredients for why that progress has been made. And some of it is I've highlighted, but one that we don't talk a lot enough there is governance. I think one of the things we were very clear on is that they need to have appropriate governance. Institutional strengthening is important. Thinking long term, housing is not something you do over 12 months. Some of the European or US models that people talk about, we forget that if you really read the history of housing in a lot of these countries, they've had significant state support. And there's hardly, I mean, I've worked over nearly 30 years in the UK. I grew up in the housing sector there. It's in my early years of housing, and some of it is shaped by, I must say, I was listening to some of our South African colleagues. Any flaws in your housing system, we played a role in that because I knew that some of my colleagues of housing association helped set up housing associations in South Africa. But those countries have had significant period of state-funded housing subsidy. We still have a significant subsidy system. So at times I marvel when I see practitioners talking about African housing problem, and we don't recognize that the state will have a role to play in supporting certain individuals that cannot afford. Now, whether the state has the money is a different point, but you cannot design an housing system for people in the bottom end of the market that cannot afford, they'll just only have enough to eat or to go to work, and they cannot meet their housing cost. So we need to just recognize that that's also going to be, I think states will have a role to play. The nature of that be up for debate. But the last point I think I'll just make is this point about going forward in terms of challenges for family homes fund is also going to be how quickly they can get the private sector to play a role in ownership but importantly, to give it the flexibility and independence to be removed totally from the Nigerian, from the state, from the state. That would be my advice to them, that how they can do that quickly. Thank you very much.